What is going on, everyone? I hope you are all having a fantastic day. So, a few weeks ago, I did a review on the Wealthfront investing platform, and typically when I review any of these banks or investing platforms, I usually use the platform for at least a month just to get to know the interface and the various features, make the review, and then unless I truly see a ton of benefit from that platform for my own financial goals and situations, I don't usually keep those accounts open just because otherwise I'd have 100 different bank accounts and investment accounts. But after finishing my review on the Wealthfront platform, I was incredibly impressed, and as I learned more about the platform and the principles behind it, I eventually made the pretty big decision to ditch my hand-picked Roth IRA portfolio with TD Ameritrade and transfer this entire $20,000 worth of investments into the Wealthfront platform to see how it does. So today, let's take a closer look at what this entire transfer process looks like, how to pick the perfect Wealthfront portfolio for you, and then take a deeper look at what exactly your money is being invested in with this automated investing portfolio. All right, let's jump right into it. So we're going to be taking a deeper dive in this video, so if you are looking for a more large-scale view of this platform and the features that they offer, then definitely check out the original review that I did a little while ago. But really quickly, just to make sure we are all on the same page, Wealthfront is a fully automated investing platform, meaning you basically put money into this account, select what level of risk you are willing to tolerate, and then they are automatically going to invest that money for you in a diversified portfolio that matches your financial goals. And it also uses some pretty advanced investing strategies that the average person would have a lot of difficulty replicating themselves. Okay, so first of all, what was this transfer process like of moving $20,000 worth of investments into Wealthfront? And more importantly, why did I do this? Well, to answer the first part of that question, to be quite blunt, it was incredibly easy to transfer my entire Roth IRA with TD Ameritrade into the Wealthfront platform. Essentially, when you open up your Wealthfront Roth IRA, they're going to ask you how you would like to fund this account. And there's an option that allows you to select Fund from Existing IRA. From there, Wealthfront is going to notify TD Ameritrade of the transfer request, then TD Ameritrade authorizes that transfer, they send over the money, and Wealthfront is then going to automatically invest that money in the portfolio that you will select, which we'll talk about more later on in the video. And from my end, this probably took me less than 3 minutes to sign into my TD Ameritrade account through the Wealthfront platform and authorize this transfer. So as you can see here, I transferred the roughly $12,000 that was in my TD Ameritrade Roth IRA, and then I also moved another $4,000 from a different account, and since then I've also started contributing for 2021 towards my Roth IRA, because remember, you can contribute up to $6,000 per year towards your traditional or Roth IRA accounts. And currently that means that my total Wealthfront portfolio is just over $20,000. Okay, so the transfer process was really easy and my entire account was moved into Wealthfront and invested for me within a matter of days. But why did I decide to do this when I had a hand-picked portfolio that I have spent years creating with TD Ameritrade? Well, for me personally, it comes down to one reason, and that is time. As a full-time student who now spends countless hours making 3 of these videos every single week, I just don't have as much time anymore to closely monitor my investments and make sure that my long-term financial goals are staying on track. And even putting that aside, I seriously buy into the foundational principles of the Wealthfront platform as far as the consistent contributions and, more importantly, the way that they are going to divide up your portfolio and invest it. Plus, all of this is going to be done for you, and you get access to some of those higher-end investing strategies that we talked about in the original review, all for one low price that basically breaks down to $25 per year for every $10,000 you have invested, means that this was kind of a no-brainer for me. And speaking of that management fee, which remember is just 0.25%, remember you can also get your first $5,000 of investments managed for free, which significantly cut down on my investment fees. So if you are interested in that, then use that link down in the description below to get your first $5,000 of investments managed for free, but if you don't see value in that, then that is completely okay as well. Now, as you might remember, there are several different portfolio options that you can choose from that are going to be based on what they call your risk score. When you open your account, you can take a short questionnaire that will help determine what your risk score is, but what I decided to do is actually look at the historical performance of the various accounts based on that risk score, and then take what was recommended to me and use all of that information to make my final decision. So in my case, I was actually recommended a risk score of 10, which is the most risky, but for a retirement account, I didn't want this to have the highest level of risk necessarily, and I was also able to find that their 8.5% risk portfolio has actually performed the best over the past several years. So that's the portfolio that I decided to go with. Now, while there are a ton of different options because of the various risk scores that they have, overall, all of these portfolios are divided up pretty similarly, and the amount that is put into each category is just changed slightly depending on what your risk score is. Risk score. For example, the 5-score portfolio is heavily invested in municipal bonds at 35%, with just 26% in US stocks, whereas the 10-score portfolio has just 4% in municipal bonds and 35% in US stocks, with an additional 30% in foreign stocks. So play around with the risk score tool that is on their website, and also check out the historical returns of these various accounts, and use all of that information coupled with the score that is recommended to you to ultimately make your decision. Now, the other thing that I really love about Wealthfront that I feel does give it a leg up over similar competition like Acorns, for example, is that they do a much better job of explaining exactly what your money is being invested in. Now, obviously, I know that with the Acorns platform, you are able to figure out what index funds and ETFs your money is being invested in, but after using both of these platforms myself, I do feel that Wealthfront is much more upfront about where your money is being invested and, more importantly, why. As you can probably tell, I am all for the passive, automated approach to your investing, but this absolutely does not mean that you should just throw your money into this portfolio and then never bother to understand where it is truly being invested. So under the same risk score tool that we talked about earlier, you're able to click on each individual category such as US stocks, foreign stocks, emerging stocks, and a ton of other investments, and see exactly what ETFs Wealthfront is investing your money in based on each of those categories. For example, if we take a look at the 8.5 score portfolio, which is the one that I personally use, you can see that their US stock category is actually investing in 3 different ETFs, and it even shows you the fees that each of these ETFs is charging, which is also really important to know, but considering that all of these ETFs are usually under a 0.1% management fee or lower, you really have nothing to worry about there. And again, you're able to play around with all of these numbers and different factors in order to truly understand where your money will be invested, and this also helps show how this platform is going to automatically diversify your money in a way that would probably take you months, if not years, to replicate with a more traditional investing account. I also encourage you to check out some of the other information on the tax loss harvesting and some of the other fantastic investing strategies that they use in order to make sure that your money is being invested as effectively as possible. But the great thing about this platform is that while it is important to understand what's going on with your portfolio, by no means does this mean that you have to be some expert. And again, it really is as simple as transferring money into this account, just like you would do with any other bank account, for example, and then it's going to automatically put that money into a diversified portfolio for you. And remember, you can also use their self-driving money feature that can automatically take your paycheck and divide it up to pay your bills, fund an emergency fund, put that money in a savings account for when you need it most, and perhaps most importantly, invest a percentage of that paycheck automatically into a regular investing account, a retirement account, or even something like a 529 college savings plan for your children. This allows you to truly automate everything from start to finish without having to do anything. And for me, that's largely the reason why I decided to invest this $20,000 with Wealthfront, and why I will probably be moving more of my investments into this platform in the future. So let me know what you think of the Wealthfront portfolios down in the comment section below. And remember, if you do want to give this platform a shot, then be sure to use that link down in the description to get your first $5,000 of investments managed for free. If you did enjoy this video, it would mean a lot to me if you would hit the like button, subscribe to the channel, and share this video with someone who you think would get value out of this content as well. And as always, thank you so much for your time. I really do appreciate it. Take it easy, and I'll see you in the next one.